Hey guys, how's it going? It's Andy from BIDU Investing. Happy Wednesday. In today's video, I'm going to be taking another attempt at talking about a Chinese company. This has been something that's been on my mind for a while. I've been trying to have a better understanding of these massive Chinese companies out there. And so at this point, I've talked about 3 Chinese stocks. I've talked about Luckin Coffee, I've talked about JD.com, and I've talked about Alibaba. And today we're going to be taking a look at what has been dubbed the Google of China, which is Baidu, ticker symbol BIDU. This is, from what I've been able to figure out, this is the first Chinese stock to ever be traded on the New York Stock Exchange back in 2007. And in its history, it has eaten up a large percentage of the market share in China. And since the departure of Google from China in around 2010, it is the dominant factor in search engines. Before we get started, I gotta say that I'm not a licensed financial advisor, and I highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Also, before we get started, I gotta say that I don't have a very good understanding of just the Chinese economy and the culture around there. And I'd like this video to be a discussion. For people that have a better understanding than I do, I'd love for you to put it in the comments section down below so myself and other people can look down there and have a better understanding of how the economy works. In this past year, there's been so much tension between the US and China, mainly about the tariffs and the trade war. And with the phase 1 of the trade deal coming through at the beginning of this new year, things started to look pretty good. When you look at Chinese companies, the beginning of this year have been very solid for them. You have the signing of this new trade deal, and the easing of that looked great for the market overall. And so at the beginning of the year, Baidu was up a decent amount. And since then, we've had a new challenger enter the ring. The trade deal is looking pretty good. Now the new problem is the coronavirus, which has started in China and is starting to spread to the rest of the world. And you might be wondering, what does this virus have anything to do with the stock market? And mainly the big problem is that it's affecting China at a very important time. We recently just had the Chinese New Year, and from everything I could figure out, it appears like the Chinese New Year is a very important time for the Chinese economy overall. There's a lot of travel, there's a lot of money being spent. And if you've seen any of the pictures of China at this point, people are being advised to stay away from the streets and areas where people congregate. And you see these videos of just completely barren streets, shopping centers, and stuff like that. The reason this video kind of came onto my mind today is I was watching the earnings report for Starbucks today, which is a company that I own. And something that they described is they beat earnings and they had upbeat talk about everything, but they mentioned the fact that this coronavirus may negatively impact their 2020 year. And I looked at it, and there were also people for Luckin Coffee, which is the main competitor in China, addressing the same thing. And so at this point, there is a lot of fear going around in the media, describing the potential that this coronavirus could topple this already kind of on thin ice world economy. And I think people are kind of blowing this out of proportion. I did some research and tried to figure out what all of the very important viruses and diseases that have come through has affected the economy and the stock market in general. And so I'll throw up a chart that I found online, kind of talking about how the stock market has reacted to some of the largest viruses going out there. Stuff like avian flu, Ebola. And when you look at it, there's not a lot of impact on the stock market overall. There's a couple times where the stock market went down, but that was not the main factor doing that. And so I think that fear is the biggest factor that's kind of pulling the market down for right now. So I don't think that this coronavirus is a reason to be staying away from Chinese stocks. When I throw up the all-time chart for Baidu, you can see how it's gone up, it's fallen, and it's starting to build a nice support. And based off of the type of stocks I love investing in, when I first saw this chart, my eyes kind of opened because this looks very attractive to me overall. And so I looked at that, and it makes sense why the stock has been falling in the past year. 2019 was pretty rough for Chinese stocks. There was a slowing of the Chinese economy, the trade war stuff, pushing the stock down. And since that trade war stuff has started to blow over for now, things have looked pretty solid. And this has looked like a decent opportunity to take advantage of Chinese stocks. However, looking at a lot of other fundamentals affecting the company, there's a lot of red flags going up, and it's very well documented. When you look up, is BIDU stock a buy? A lot of people discuss the fact that 2019, they had 2 quarters where they reported negative earnings, and that's the first time that's happened, or that they've had at least 1 quarter go negative since they've IPO'd, or since they've been put on the stock market since 2007. And when you've gone this long without going negative, that's a big sign. Also, it appears that revenue has been slowing overall for the company, and putting that with the earnings per share, with the volatility or the risk involved with the Chinese market, makes it kind of a risk. So with this poor revenue and earnings per share recently, the stock has fallen from its recent highs. And currently it's sitting around even year to date. And that's including the fact that at the beginning of the year, the stocks were pushed up because of the trade deal stuff, and then they've been pulled down since the coronavirus. And so it's done pretty well at holding its own. I think it'll be very interesting to see how these upcoming earnings per share play out for the stock, to see if it can recover and go positive again. I don't think those two fundamental aspects are enough to push me away from the stock overall. The things I see, including the technology they have, one of the recent articles I saw, which was very underreported in the United States, was the fact that Baidu and they had a competition for word recognition compared with Google and some other companies like Microsoft. And Baidu had the highest score ever and was actually above the human average, which is very impressive. They also have autonomous cars being tested out. And the stock got pushed up at the beginning of the year talking about news on how that was going very well overall. And so Baidu isn't just a search engine. They have a lot of AI technology, which I think is really cool to look at. All right, at this point, since there's a lot of price moving associated with Baidu, let's go take a look at the charts, and then finally we'll go and take a look to see what the analysts have as the 12-month outlook for the stock. All right, so here on Robinhood today, taking a look at Baidu. And as you can see, portfolio has been doing pretty well today. But when I go to take a look at Starbucks, you can see that it has fallen after hours. And when you come down here, it talks about Chinese store closures as a result of the coronavirus. As we go take a look at Baidu, BIDU, let's wait for that to load up. It's currently a 76% buy rating, which is lower than some things like Tencent and Alibaba, which I think is pretty interesting. Only 16,000 people owning it. When we go to 1 month, it has been pretty flat, which is why it's flat on the year. Up 21.5% in 3 months, down 25% in the year, and then 5 years, it's down 46%. So it's been a while since it's been at its highs. As we come down here, 76% buy rating. Here are the earnings that have been sliding recently. And then here's Tencent, Alibaba, JD. JD is not higher than Baidu, but Alibaba and Tencent both are. As we come and take a look at the stock, here we are in TD Ameritrade, and this is kind of the history that it's had for a while. It's been up and down, and it's been very interesting to look at. Here is May of 2018, and it has fallen pretty much ever since then. In fall of this year, when you start getting some relief from the trade war stuff, starts to build a nice support, pushes up. Let's get closer in here. We go up here, we have coronavirus stuff, starts pushing the stock down. Based off of what I'm seeing here, I really enjoy this support that's starting to build, so I'm going to draw this out. And then, let's see what I'd be looking for. It hasn't reached this zone yet. I was hoping to see this as a gap fill. Did not make it up there. When external news pushes away from that, that can be a reason why you don't get a gap fill. But I'm liking the push up, consolidate, push up. Just the movement of it looks very good. It has built a very nice support, and things have been looking pretty good. But when you come back and take a look at the all-time, obviously there's a long way for it to go still. Let's see, let's extend these out to the left. My technical analysis of this stock is, I think it's very realistic for it to come up to this 185 area, maybe more realistically 175. And if that happens, I think that's a very good year. But as I mentioned in the rest of the video, there's a lot of external factors that could be pushing the stock down, including some internal ones with they're struggling with revenue and earnings. And so I'd be waiting for the next earnings report, which, let's see, if this was in November, that would come out in February. So once that comes out, we'll have kind of a better understanding of how the coronavirus has been affecting the stock and what the outlook for it is. Here we are on CNN Business, or CNN Money. As I mentioned, it is completely flat on the year. When we come down here, I don't know what's up with some companies on here. Must be some error in their algorithm, but they have it potentially going up 900% and the low end being up 560%. So we don't take a look at that, but I thought it's interesting to look at this. And I think there might be something wrong with Chinese companies overall. When I look at Alibaba, up 860% and then down 475. So there might just be a problem with Chinese stocks in the system, but we're not going to take a look at that too much. Here's the earnings growth that has been slowing down. Revenue growth still is doing well, but as I mentioned, it has been slowing down recently. Going on to Yahoo Finance, this was kind of surprising for me. The fact that they have it as undervalued, down in the short term, up in the medium and long term with a 1-year price target of 148. And so Yahoo Finance seems to be pretty bullish overall. I was kind of surprised how high they have their 1-year price target. I have mine currently sitting around 175, but I think 150 would be totally realistic. But the fact that they have it as undervalued is a very good sign, in my opinion. So overall, what's my opinion on Baidu, and do I see myself taking position in this stock anytime soon? And the answer is yes, I kind of do. The more I look at it, there's a lot of very attractive Chinese companies out there that I've talked about on this channel, and I'm sure I'll talk about it in the future. But when I look at the impressive stuff that they're doing it with AI, it makes me want to be a part of it. I see the stuff about how they're kind of losing traction with their revenue, and maybe that's a bad sign overall, but I think it's a great opportunity for the criteria that I look at for taking a position in the stock. Something where I believe in the stock and I have a general understanding of how it works. I'm not at that point yet, which is why I'm not taking position yet. But the fact that they've been hurt by bad news or bad earnings and has pushed the stock down. They've been hit by a multitude of problems in the past year that's pushed the stock down, and they've built a support and they started to push up. So it checks all my boxes, maybe not the first one yet, but with a little more education on how the company works, I think we can get to that point. With a Chinese company, there's a lot of risk associated with taking a position right now. There's the potential weakening of the Chinese economy, which has been in the news a lot. There's the trade war, and now there's the effects of this coronavirus. I don't think the coronavirus is going to be a long-term impact on the stock market, but it's something to take into account right now. So with this video, Baidu has been added to my watch list for the next couple of months to see what happens and see if I want to take a position in the future. Everything I've looked at, I like a lot. I may be waiting until the next earnings report comes out to see if they can go positive and see if they can get that revenue pushing up again. However, I think based off of what I've been seeing with the coronavirus, it appears like the Chinese economy will suffer a little bit just in this quarter. And depending on how long this goes on for, it may be the deciding factor for when I take a position in this company. So let me know what you think about Baidu overall. Do you think I have a good understanding of how it works? Or if you have a better understanding, I'd really appreciate it if you put it in the comment section down below, just so I can learn from it and people can also read it and have a better understanding. Thanks for watching this episode of Robinhood Top Stocks. If there's a video or an idea you'd like me to go over in a future episode, please leave it in the comment section down below and I'll get to it as soon as I can. Thanks for watching this episode, and I'll see you in the next video.